From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. An earlier version, of course, of the program today, timestamping this at 15 minutes past 3 p.m. Sydney, because it is the last Friday of the month. So we've got our special The Last Call occurring shortly. But let's get into what we've seen on the overall markets. And it has been a good day. A little bit of mixed movement coming through from US and European markets overnight, but we've seen some very good rallying coming through in our materials players, BHP in particular, up by more than 2%, lifting the overall index. We've also seen some good moves coming through from Rio and some other mining players too, and a bit of a switch from what we saw yesterday with gold stocks lower. So just getting to the themes of the day, very much a Friday bounce back. Of course, it was a bit of a tumultuous session yesterday around the globe as we started to worry that AI thematic, that big tech momentum had fallen somewhat, but we have seen some positive momentum coming through today. As I mentioned though, big tech's big bad week. We had Tesla at one point down more than 12% during this week as we saw reaction to its earnings. Also the likes of Alphabet, the Google parent. Chipmaker Nvidia overnight was down about 2%. AMD was down by more than 4%. And Meta slumped by about 2% as well. So this is really just as we start to see a bit of an unwind coming through in this mega cap tech rally that has been really driving momentum in equity markets. A lot of conversations about whether or not this rally has faltered and will not come back. You can find all of those, of course, on our website, ausbiz.com.au. But of course, markets always forward looking. We're looking ahead now to next week's inflation print, so eye on CPI. Now, I read a really interesting piece from Westpac actually, and don't forget that Lucy Ellis, the chief economist, used to actually work at the RBA, and she said that we are not that special. So she thinks it's very unlikely that Australia will move in the opposite direction to global disinflationary forces and actually see the RBA hike in August. But of course, at the moment, we're seeing the inflation picture very much affected by higher rents, by higher education, by higher medical costs. And we are looking at whether or not that inflation print that comes through for the June quarter next week, if it's too hot to handle, could force the RBA's hand. The ANZ saying that they think second quarter CPI will slightly overshoot the RBA's forecast. We'll get Shane Oliver's views in a moment. Having a quick look though at some of the sectors today, I mentioned the oil prices rising overnight on that strong US economic data. We've seen some good moves coming through in the big energy players today. Also the big miners, of course, looking good, particularly led by BHP lifting the market with a more than 2% jump. But a switch out of gold, which performed very well yesterday. Newmont down 2.5%. Evolution, Regis, De Grey and Northern Star also under pressure. And Northern Star actually had a broker downgrade today as well. And a quick look at the retail stocks. Don't forget we've got June retail data coming through next week as well on the same day, I believe, as the CPI print. So it'll be a very, very busy Wednesday indeed. All right, getting a quick look at some of the key stories. Mineral resources up by more than 6% at one point, closing, or I should say, at 3.5% higher at 3:15 after the mining company said it was on track to meet its production guidance for full year 24. Elsewhere, we had been looking at some of the energy players, Ampol higher, Santos up as well. 9 entertainment shares, interesting. The Paris Olympics, of course, are kicking off, but the publishing staff have voted to strike. From 11 a.m. this morning, the bulk of the workforce at the AFR, the SMH and the Age walked off the job after rejecting the latest pay offer from management. Elsewhere, we've been looking at, of course, the ANZ bond fallout and shares down by about 0.4%, that trading scandal fallout. And Bellevue Gold, wow, shares down 21%. The WA-based gold producer completing a $150 million institutional placement at a 15.3% discount to its closing share price on Wednesday. Let's get to our guest. Shane Oliver from AMP joins us. Shane, we couldn't speak to you last week because of CrowdStrike. I remember when I was emailing you thinking it was just us that were offline, then we found out what had happened. But what a week, and particularly as we saw that big tech fallout.
It certainly has been. Obviously, you saw those big falls in CrowdStrike last Friday. night in response to that outage. And then, of course, earlier in the week, and then, of course, the rout in tech stocks, if you want to call it that, has continued. I think it was largely because expectations were so high after several reporting seasons which have met and surpassed expectations. So those very high expectations, eventually you get to a point where they can't be surpassed. And then, of course, you start to underperform. Well, we saw a little bit of that in the last week. Good news is that there's still a rotation. The Russell 2000 small caps in the US have held on to most of their gains since early July. Maybe we are benefiting from some of that rotation in Australia. We haven't come down as much. In fact, we've nicely held above the high back in March. So that breakout point has been held, and you could argue this might just be a bit of a corrective activity rather than a new bear market or anything like that. But I guess the broader issue is global growth. We have seen some softer data out of Europe, PMIs. US data so far looks so good. So good for the June quarter was pretty strong, although forward-looking indicators don't look so good. There's also concerns about another rate hike in Japan in the week ahead. So all of these things are sort of giving us a messy picture. I think the other thing we can't ignore is that we're coming to the end of July. July is seasonally a solid month for shares. And then we certainly made new highs earlier in the month. And then, of course, as you go through to August and September, it gets a lot rougher historically. Not guaranteed, but that's been the historical pattern.
Yeah, and as you say, when it comes to the correlation with our market, you had already updated your forecast for the ASX 200, but the key risk still remains if there is, I guess, a global recession.
That's right. I think if we have a recession, all bets are off. If you go back through history, the first rate cut from the Fed, and of course everyone is obsessed with the Fed, but the first rate cut from the Fed, if you go into recession, then shares don't rally, whether it's 3, 6 months and often 12 months later, shares can be down if you go into recession. But if you avoid recession, you just get a slowdown, then shares invariably tend to rally because it improves their valuations, improves the growth outlook. Whereas if you go into recession, you need lots of rate cuts to turn the ship around, so to speak. So hopefully we avoid recession. I think the risk is significant. But that's why I say a recession is probably the biggest risk in all of this. Our view is that rate cuts are coming. They're gathering pace. We're seeing a global easing cycle kick off. Central banks have gone from worrying about inflation being too high to growth being too low. So that's in some ways a good sign. The ECB and the Canadian Central Bank have cut. And then before that, the Swiss and the Swedish central bank had cut, and emerging market countries have been cutting for a while. So I think that cycle is now well underway. As we go through August and September, we're going to see the UK probably in the week ahead, US, more cuts from the ECB and so on, kick in to start cutting rates. And you mentioned Lucy Ellis earlier saying that we're not that special. To be honest with you, I tend to agree with her. If you look at our inflation rate and track it against what's happened globally, we're not that special at all. It doesn't look like much of an aberration, even though we've been grinding our teeth and wringing our hands for the last few months now, given those high numbers we got starting in March. But if you look at it, we followed the rest of the world up on inflation. We're following the rest of the world down on inflation. The US had a pause 3 months, bit of an uptick in inflation, talk of rate hikes. We've gone through exactly the same thing. Odds are, I think, we will start to see a resumption of falling inflation in Australia. There's nothing that I can see that indicates that we're radically different to these other countries. In fact, people keep saying, well, Canada, they've got a 6.5% unemployment rate. We've got a 4% unemployment rate. Well, flip it around the other way. They've got something like 5.5% wages growth. We've got 4% wages growth. So the swings and roundabouts with that comparison as well. So my feeling is the Reserve Bank should avoid another rate hike. I think the risk is high. I can't ignore that. And I still think the next move is a cut. And the money market has been coming around to that expectation. When I last looked this morning, the money market only has 19% probability of another hike in August. And the first cut has come from earlier this week. It was July. They're now saying May. I think it's probably going to be February. Still a way to go, but I don't think we are that different to the rest of the world. I think we're just following the rest of the world with a lag.
All right, we're not that special. Shane, you answered all my questions there. So now I'm going to ask you just a quick one. You've been listening to Beach Boys, God Only Knows.
Well, I've been a Beach Boy fan from way back. I think I've seen the Beach Boys as a group twice, once down the road at Narrabeen. Out of interest, if you listen to the song Surfing USA, they mention all these places in the US, but they mention one in Australia because they all read Tracks magazine back then, and it was Narrabeen Beach in Australia. So I actually saw the Beach Boys at Narrabeen Beach in 1992. I've seen Brian Wilson multiple times. So I'm a bit of a Beach Boys fan, but God only knows, I'd have to agree with Paul McCartney. It is one of the best pop songs ever produced. And, there's people have broken it down and say that it is a very complex song. And for Brian Wilson to be able to hear all of that in his head and then write it into music is quite an achievement. So it's always been a favourite for me. And every time I hear it, I sort of tear up a little bit. It reminds me of a song in a church, like a hymn. I love the lyric. It's realistic. It says, as long as there's stars above you, I'll always love you, sort of. Yes, it's got that sort of funny qualification at the start there, which you start thinking about, well, what does that mean? But I've always just found it to be an amazing song. And there's lots of beautiful versions of it, one of which I stumbled across in the last week on YouTube or Spotify if you want to check them out.
All right. Well, that also reminds me of Love Actually too. I think they play that towards the end.
They do,
Shane,
yeah.
Have a fabulous weekend. Unfortunately, we've got to cut it short, but always a pleasure. Okay. Shane Oliver from AMP with us there. All right. Well, of course, we were looking very closely as well in terms of a lot of stock moves today, and the stock of the day was Mineral Resources. We had Jonathan Takadina from MPC Markets and Adam Dawes from Shaw and Partners on the call.
What we've seen is that it's been falling on the back of mostly lithium and iron ore, and we've just been pummeled so much. The sentiment in the lithium space is so poor at the moment, but the thing is, it's a well-run company, tight-run ship. We're at the bottom end of the range here, and it's a very volatile stock. I think there's a buy opportunity here.
Yeah, I'm going to stay with that. I'm going to say it's a double buy. Absolutely, I think. Overall, MinRes is a mixture of, as you say, mining services, and I like to call it the old world versus the new world. Lithium's the new world, old world is iron ore. So
it's got a hand in each pie.
It's got and it does have it, and absolutely, Jonathan's absolutely right. That lithium side of things has really dragged down. They were actually, overall, they reported 487,000 dry tonnes of spodumene, which was at their overall. They guided to 460,000, so at the top end of that range. So they actually beat expectations on that. And then the overall, they did quite well.
All right, just timestamping this again, that this is before the market has closed, but having a look at where the market leaders are with 30 minutes of trade to go. Star Entertainment up 5.6%, Coronado, Karoon, Liontown Resources all looking good, along with Judo Bank to the downside. A lot of those gold players led by Bellevue with that 21% drop after the capital raise. To the small end of town, you can see there Australia Minerals up by 14%, and to the downside today in the small caps, Bowen Coal, Meteoric Resources, Strickland Metals, Titomic and Sheffield Resources. All right, kicking it off to see what we're going to look out for tonight. A big one, we've got the core PCE price index in the US, also data on personal income and spending, and some results including 3M, Aon and Colgate-Palmolive. Looking ahead to next week, as I discussed with Shane, it's all about the CPI for the June quarter and the June retail sales figures, all of those playing into effect for what the RBA will do in August. We've also got the Fed decision, the BOJ policy meeting, and next Friday night, the US July non-farm payrolls number. Well, with 30 minutes of trade to go, it is a positive session on the market. We're up 0.7% on the CBO 200. But that does it for this special early edition of the COB. Stick around, we've got the last call coming up.